Good weekend, all. Ira Epstein, and here we are on Sunday, and I wanted to wait for today. I knew I wasn't going to put this out earlier once I saw the tariffs come out on Mexico and the European Union, so I figured let's see what the futures do to give us a better story as to where everything is at. As you can see, and by the way, right now it's about 5:35 in the evening, Central Time. You're down 20 points in the S&P, 160 in the Dow, 88 in the Nasdaq, and 12 in the Russell. What these markets have been doing is each time we see a major partner get a tariff, the market starts off down, but it's come back fairly sharp later in the week, and in fact hitting, as you know, a number of new all-time highs. I'm not saying it's going to repeat all the time but I don't have any reason to think that's still not part of the plan. We'll take a look at the charts and see. You're basically, in most of the energies, just sitting still, with the exception of distillates, which are getting a bid, certainly not moving in the bonds or notes off this. The dollar up 11 points. You can't say, oh, this is a big move for the dollar. It isn't. It has barely moved at all. And you're down 19 points in the euro. Why? Because I think what the markets realize is the president has put these out, and I'm talking President Trump, with the idea that you can still negotiate to try to get these down by August 1st. Now, he's made it very clear in his posts and all that if you retaliate against these, he will come back at you hard. So if the European Union and the others want to do what they keep saying, we're going to retaliate, you're best off doing nothing at this point. Negotiate until the last minute, and if you can't do it and that's what you think's in your best interest, go for it. However, you're probably going to go to a 50% tariff at that point because we are the big dog, and this is what he thinks is the right thing to do. You're due for a big announcement tomorrow, supposedly on Russia. I think it's going to be a lot of weapons. I wouldn't be surprised if we give Ukraine some weapons that can go offensive. You know, so far, most of the weapons we as Americans have given have been defensive weapons. Now, what if we want to give them medium-term and longer-term missiles? I don't know, but I realize that I think that there's a real problem with Putin and how he's playing the President Trump. I've said that repeatedly here, and I think he's going to see there's another side to Trump. There's also a lot of talk about taking now the monies that countries are holding. But they keep saying the interest, and it could be the interest that money's earning that are in banks that they're going to take rather than principal. We'll find out tomorrow. Don't try to second guess it. When we take a look at the S&P for the month, you're still up about 0.36%. When you look at the weekly starting off, all right, you're down 1/3%. Is it a big deal? No, not yet at least. When you look at the chart action, I don't consider that bad chart action on a weekly chart. You've come up. You're going a little bit sideways. The pattern is still higher lows, higher highs. That, to me, is bullish. The support in the market is all the way down at 58.23. You'd have to break 400 points. Do you see anything on these tariffs that's going to break at 400 right now? You'd have to change the psychology of the market, where the market stops viewing these pullbacks as buying opportunities for that to happen. You're not there yet. Could that happen after August 1st and everything settles in? It could, but the president will keep the door open and say, hey, come on in, let's negotiate, and we'll take that tariff down. And the moment he does one or two of those deals, you put back on this psychology that things aren't going to be that bad, that there could be a way out of this to a degree. You're not taking away those 10% tariffs. I've been adamant on it, and I'll stick with what I believe. So that's where I see the market right now. The resistance, you know, you're getting up by Bollinger Bands, you're backing off, but you have embedded readings. This is the strongest signal I know of in charting. When a market locks in that momentum, everything takes over because it becomes what's called the momentum trade. And on the momentum trade, until you lose that upside momentum, the pullbacks in the market are often buying opportunities, and that's where you see the people come in that go, darn it, I've missed out. You're at new highs. I want to come in on the pullbacks. I kept this on the Dow because you can see all you did in the futures is go up to the contract high and you ran out of momentum. Not really. You've got your bullish embedded reading being built. You can see it right here. Let's go back to last week, all right? There we go. Both numbers are over 80, both over 80 the week before, not the week before. So this is a market that doesn't have an embedded reading just yet. It could get it this week, doesn't quite have it just yet. In the Nasdaq, you have it, no question. You're at new contract highs. And I've got that blue line in the Russell because it's also not at new highs. And as you know, I've said that this is where I think the public is coming in now on the brakes going, the other markets are too high. I want to buy those stocks that haven't moved yet. They'll move. Okay, that's what people are thinking. As you can see, you're about to get another crossover where the 18-week average of closes might get over the 100-week this week. And if that takes place, you're back in a bull forum for that. What do I mean? At that point, when the red line's over the green, the shorter-term average, the 18-week, is over the 100. The 100's over the 200. Very important. Now, I don't show the 50-day average here, because I show it in my subscriber videos, and it's really important, especially for death crosses, golden crosses. You watch all that as it comes out. I haven't had a person come up on this say, Ira, you're not covering Bitcoin. How could you not cover it? I do cover it, and I cover it aggressively in my paid subscriber videos. Folks, what you get here is for free. This is a feeder into my subscriber videos. This does not replace them in any way. Got it? Higher lows, higher highs, embedded, still bullish. Notice how it got to what we talked about, pulled back. Now we'll see how Europe, when it opens tonight, how do they react to the 30% tariff? What I think you're seeing is calmness. And everything I'm reading, they're going to continue the negotiations, try to get that 30% reduced. There could be carve-outs. What about autos? Are they going to be able to keep some of that out? What are they going to do on other products? Similar to what Canada got. You saw in Canada that, yes, he put that tariff on Canada. However, there's carve-outs for energy. There's different carve-outs for the USMCA products. So it's not quite what it seems, the same thing in Mexico. But they can get those numbers reduced by negotiating and coming in. What they know already, they see their number. What do? You want to hit back at the president? Go ahead. You know what he's going to do to you the moment you do that. In the 30-year bonds, you have the higher high, lower low. I don't see a pattern to trade off of that right here. And in the 10-year notes, it's different. It's bullish. You've got higher lows, higher highs. But I'm going to continue to say, I don't see any reason for the Fed to do anything in July, and we need more data to even know about September. So while people are saying, oh, September is going to be a lock-in for a cut, I am not in that camp. I want to see the data. And if the data shows inflation is stable and labor is weakening, that'd be one thing. I happen to think you're going to see inflation by that point ideally go up. Now, why do I say ideally? Because we're all wondering, when does this tariff inflation hit? Now you're getting bigger numbers. And if you don't think they're going to hit, you're on your own. I'm not in your camp. In the dollar index, it's a bounce in a market that's still bearish. This isn't setting everything on fire today. You still have the embedded reading. I think the pros are going to sell this rally off the weekly chart. As long as the red line doesn't close over 21, it's at 17 right now on the weekly chart. In the eurocurrency, you didn't break the back of the bullishness in this. You haven't come crashing down today. You still have the higher highs, higher lows on the weekly chart. Close that under 79, and it's right now at 86. I'll take a complete different point of view on it than a correction's happening. Until that happens, you won't shake me up with this news. In the Canadian dollar, you still have your embedded reading here. You have to close under 79 to tell me you're going to come down to these moving averages. I am still in the bull camp. So basically, I am still bullish currencies, bearish the dollar. The yen is a different story. You have your elections coming on the 20th, and we will see what happens, the seat of power, how it's going to go for Prime Minister Xi. But there's a lot to worry about here in all kinds of manners. I would stay away from that market. Bitcoin. People have asked me where I think Bitcoin is going, and I've said $150,000. Do I think it's right now? No. Do I think the market's just going to pick up and run? Doesn't have to. It could. It's got my most bullish of signals, the embedded reading, but you rarely stay over that Bollinger Band. What you'll instead do is push it up, probably pull back and push it up again. When we look at the differential between Brent and WTI oil, it's just staying here around the $2 mark, hasn't really done anything. When we take a look at Brent on its own, it came down to the 18-day average and stabilized itself. Now, as you know, we've just finished up a whole series of events where OPEC came up with their projections going forward for a couple of years, and the IEA just came out with theirs, and the two, as usual, don't completely jive. The IEA sees a weaker format for the oil than OPEC does. Market's up a bit, still in an uptrend. 6,800 will be the support. Take out 66.34, you break the market. So if I had a bias, and I do, I'm bullish right now until that 66.34 is taken out. In WTI, you'd have to take out right here, I think it's the 64.5 zone. Until that's taken out, do I have the same bias? I have a bias, but no trend. This has a higher high, lower and low scenario, not the same type of picture. In gasoline, the market's in an uptrend. It's holding the 18-week average of closes. The resistance is up here at the 225 level. It bounced after the 4th, as we talked that it likely would, and I still see the market more in a supportive zone than anything else. So you put this together, you try to come up with your game plans, and that's the key of what you do. Now, this is going to be an important week, and you might want to take advantage of taking a look at it with me in the morning subscriber videos. I record the futures one at 6 in the morning. It's generally to you by 6:40 or so. And then I do the Spider ETF with 40 charts also. I do that at 9. I always let the first half hour of trade come into it. In futures, it's 23-hour-a-day trading except for Saturdays. So, you know, it opens again on Sunday night, and then until Thursday, it's 23 hours at a shot. So you don't have to wait that time. So how do you get this? It's simple. Go to iraepstein.com. There's icons up here. You want to go to the research section and get it up there. I'm Ira. You have yourself a great day, a great evening, and I'll catch up with you in the other videos tonight and see you in the morning. Take care.